Chris Eads of the ClearBridge Energy MLP Fund. Why are energy MLPs a smart investment now?
Well, MLPs make sense right now for a couple of reasons. Number one, you're getting attractive yield. MLPs is an asset class yield 6 to 6.5%. More importantly than the current yield, you have a lot of growth in this space right now, and this is really a function of the build out in energy infrastructure that the U.S. is undergoing right now. We've seen natural gas production rise by 30% over the last 5 years. Crude oil production, natural gas liquids production over the last year was up around 10%. When you have production growth to the extent that we're seeing in the United States again, you need to build out infrastructure to move that production from the wellhead to the end user. And MLP companies are at the forefront of building out that infrastructure, and it's that build out of infrastructure that's driving the growth that we see for not only 2012, but 2013 and beyond.
One infrastructure name that you like is MarkWest. Why do you like this one?
Well, MarkWest is a very interesting company. It's a hyper-growth company in the context of MLPs already being a fairly high-growth sector to begin with. MarkWest is focused primarily in the Marcellus Shale play in Pennsylvania. The company currently yields around 5.3% in terms of its current yield. That's attractive. However, what's more attractive is the growth projects that they're currently building out today. We should see upwards to 17 to 18% growth in that distribution yield over the next 12 months and a comparable level of growth as we move into 2013.
You also like Western Gas Partners. Tell me why you like this one, and also, what will the low price of natural gas, now at record lows, how will that affect Western Gas?
Great question. The answer is it won't affect it very much. MLPs in general, not all of them, but most of them, are relatively insensitive to the price of the underlying commodities that they end up transporting. It's really a toll road at the end of the day. And what matters for a toll road is not the not the value of the commodity moving over the system, rather what the quantity of the commodity is moving over that infrastructure system. So whether gas is at $2 or whether gas is at $5, these companies are generating the same amounts of predictable levels of cash flow. Now getting back to Western Gas specifically, Western is the MLP company backed up by its parent company, Anadarko Petroleum. Anadarko Petroleum has been steadily moving assets from the C Corp, Anadarko, into the MLP company, which is Western Gas Partners. Anadarko has been spending roughly $1 billion a year on midstream infrastructure assets. All those assets will eventually be dropped down into Western Gas Partners, giving this company very visible growth for the foreseeable future. I would expect their distribution growth to be up around 20% in 2012, perhaps a comparable amount in 2013, and you're already getting a company right now that yields 4%. Finally,
what's the biggest risk in investing in MLPs? There's a lot of worry about leverage out there, so if rates move higher, that could affect some of the MLPs.
It could. Most of these companies are fairly well capitalized. If you look at debt to EBITDA levels, which is a fair metric to evaluate financial leverage at the MLP companies, most of them rather between 3 and 4 times. I wouldn't be worried about leverage at the individual MLP level until we saw leverage approaching 5 or greater times current estimated EBITDA. Interest rates, always a question that we get. There is this perception out there that because MLPs are yield plays, that they will behave like a fixed income security will, i.e. it has a lot of sensitivity to changes in interest rates. Actually, that's not quite the truth. What matters for MLPs is not the spread of MLP yields relative to, say, 10-year treasuries, and you can see that historically. What matters for MLPs is the absolute level of yield. If you look out over the last 10 years, MLPs have traded in a very tight yield band between 6 and 8 times with very little deviation above or below that range.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting